Hello everybody, welcome to another episode of Erickson TV. Curtis here with Lauren. Lauren,
hey everybody.
Hey Lauren, we got an email from a very valued client today, and it's actually very timely and topical because of all of the stress in the world with Japan's earthquake, and then it turned into potential nuclear release of radiation that might come to the United States, all things like that that are going on. And then of course at the same time the stock market has been very volatile more recently, down in the last 3 days consecutively. So I thought it'd be a good time to talk about this email. I'm not going to mention the person's name that sent the email, but basically it's a person that portrays himself as knowing about the doom and gloom in the world, and when to get out of the stock market and when to go into this type of investment, and there's all kinds of different people like that, doomsayers out there. What are you seeing out there?
Right, well, most of the doomsayers don't tend to get very far, and most of the time what they do doesn't work. But there's one of the things that I'm seeing, which is really fascinating, is then there are, of course, another group of people that say, well, since there are these doomsayers out there, and they never seem to be quite right, what we'll do is we'll do the opposite of what the doomsayers do. So, for instance, on my favorite little Bogleheads forum, one of the people who posts there, because we get some weirdos posting there too, one of the people who posts there has this theory that anytime there's a really bad day in the stock market, you should buy a lot of stocks.
Well, do people do that? And that's what we do, but do people do that?
What he's specifically trying to do but the only problem is what he wants to do is hold his money in cash.
Oh, I see.
Until there's a really bad day, and then all of a sudden buy it.
So what does he do on a good day then?
Well, that's exactly the question. I wonder about that too. Well, that hasn't worked either.
All right.
So far we've had the doomsayers who think that you should, flee and head to the hills and put all your money in gold or do something else. And of course they tell you this 2 years after, after the collapse happens, and then, it's not any use. It's not any use now. And then, but the other side of the people who sort of have this conception that, oh, just do the opposite of whatever somebody else does. You know what? That doesn't really work either. The truth is, we don't know what's going to happen.
Right. And I always say this to people that get either blog or get a newsletter or something like that. If these people really knew what was going to happen, or could have projected what was going to happen, why would they tell the general public and try to sell the information? Why don't they just invest their own capital and make a killing based on timing on that? So,
that's exactly right. I mean, this guy on the Bogleheads forum, why isn't he just making a killing? Why is he forced about it? You think, well, maybe there's some entertainment here happening, but yeah, not a good investment strategy.
Yeah, and there's another well-known doomsdayer. I will not mention his name, but he's been around for like 3 decades. He was talking about buying gold back in the 70s, buying silver in the 80s, and then he talked about the great stock market going up to the Dow 30,000, and then
yes.
And the thing I like about talking about this guy, which I'm not going to honor him with mentioning his name, is that during different periods of time he actually started his own mutual fund.
Yes.
And the mutual fund that he started back in the decade about the year 2000. That mutual fund, the premise of the mutual fund was to time into markets based on demographics and based on what was happening with current market conditions. That mutual fund failed so miserably that they had to shut it down in 2005. It was terrible. And then he more recently started a mutual fund late 2009, and I've been able to track it, which is kind of interesting. And he's underperforming the U.S. stock market index by about 10% per year annualized. So that's just another concrete example of why not to listen to people that are trying to sell doomsday information. So our next episode I'm really excited about, so watch out for that. Stay tuned. I'm not going to tell you what it is, but it is about, to give you a hint, it's about market volatility. And we'll see you next time on Erickson TV.
See you next time.